Now, what you're going to notice here, and like I said this to you this morning, okay, it's not managing risk is the most important thing when it comes to trading profiles. So let's quickly just go back to the drawing board and let me just quickly explain to you, my thinking around how I planned to execute, and then you can get a little bit of an understanding of, where my thought pattern was. So let's quickly come back to the drawing board and let's have a look at it. Okay, so in theory, a double distribution. Okay, it's nothing more than where a market has a high volume area and a high volume area. Now, in essence, okay, what happens? So if we look at the Bund early on this week, okay, the market was forming a distribution within, so we'll call this minus 1 week, okay, and this is the current week. Okay, so it's almost Monday plus Tuesday plus Wednesday. So we could see Monday, Tuesday, Wednesday, the Bund pretty much just spent its time trading within that lower distribution. Now, we opened up very early this morning and we started to trade into this low volume area. Now, if you go through, obviously, the market profiling course, you'll know that once we start to trade out this low volume area, we're likely to see anyone short taking profit, anyone that's poorly positioned short stop out and get out of those positions. And that's ultimately what takes prices higher. Now, what we expect to see when a market fills out, particularly such a wide range of single prints, is a lot of two-way trade. Okay, it's very, very unusual to see a market just, knife straight into it. What you traditionally would see is a little bit something like this. So you'd see the initial stops, and then you would see a little bit something like this. Okay, a lot of grind out. Now, it's important to understand and acknowledge that, because if you were long today, if you didn't come in with that sort of a mindset or that sort of thinking, you would have ultimately sort of been buying every high, and you wouldn't necessarily have been rewarded. Now, what I would say is, if you look at today's Bund, it was particularly generous. Okay, it did straight line pretty much. It kind of took the initial stops, did a little bit of thing, went again, did a little bit of thing, and went again. So it was pretty generous today. But it isn't always that case. Sometimes it can do some significantly strong two-way trade. And so it's just important, when you go over the analysis, make sure you understand what kind of price action you expect to see if you are long, looking for that profit taking. Now, what I want to talk about is the other side. So we're going to watch a little bit how that price action looks, and then we're going to talk about how the price action looks once we trade it up at the 85. So let's go through this and let's have a look how it looks on the price ladder. Okay, so I've got the ladder in front of you. I just want to quickly bring the 1 minute chart up, and then we can highlight obviously our key little levels, and then you guys will be good to go. So let's quickly get this 1 minute chart up. And let's pop this out. Okay, so let's highlight the key little positions here. So I can do that. I'm just going to pop this up. Alright, so our first key little area where we backed off was the 67s and then the 85. So let's see the market reaction, when the market took out, for instance, even the 67. So we're going to watch the first time we test those 67s, how it came off. We're then going to watch the break through the 67s as well as the 85s. Let's see if we can pick up a little bit of the price action and ultimately identify some opportunity there. Okay. So first up, obviously, we're not going to see the 67s, guys. I've obviously had to shorten this video. I'm going to take you straight to the 85s and we're going to watch through. So the first thing to pay attention to now is we've broken the 67s. Now you can see on the price ladder, we've kind of got a distribution lower down, okay? Note 67s was where the last high was. We've then extended, okay, so you can see straight away, I don't even need to slow this up, but we can see straight away that the market is effectively, it's taken those 67s and suddenly it's looking very thin, very aggressive to the upside. And that's important to understand. Let me quickly show you something again on this 1 minute chart, okay? Note, if you were short the 67s, right, how much opportunity did you have on the downside? Okay, let's call it 14 ticks. So in other words, let's say you took the short on, you made 14 prices or 13 prices. Okay, how much work did you have to do to get those 14 prices? Right? What you should be saying to yourself is quite a lot. In other words, if you were short, not only did you have to sit through a lot of grind, not only did you have to sit through a double top, but you had to sit for a very, very long time to get just to go on sides, for instance. Now, the first thing you need to say to yourself is, people that were short, okay, that were hoping to get out, didn't get the opportunity to get out. Equally, people who were looking to get long didn't really get a decent entry to get long. Okay, those two factors combined together is ultimately the reason why once we took out that high, we got the aggressive move to the upside again. And that's crucial to understand, guys, because when the market is, trending or aggressively moving in one direction, right, it's all about, how it's effectively facilitating trade. Okay, in this instance, longs were not allowed to get in and anyone short was not allowed to get out. And that's why we got the second aggressive move up. So paramount to just understand that. Okay, so let's keep this up and let's have a watch now how the market trades out on 85. So I want to point out particularly the absorption. Okay, so we can see market comes into the 82s, 83s. Note, obviously, we said those 85s this morning was quite an important little area. Why? Well, because it was the VPOC on the week. So it was the highest traded volume over the last, 2 or 3 days. So it was a key little area. But let's see if we can pick up on how the buyers and sellers respond. Now, the first thing to point out, if we pause this again, notice how in this entire move up since we took out the 67s, we can see that there's a lot of thin trade and all of a sudden the market has now run into quite a little bit of absorption. So we can see even ahead of the level, we can see quite a lot of reloading absorption. Okay, so let's watch it over. So we see a reload bid. Let's see what happens when the buyer lifts. Okay, so the buyer lifts and the seller equally reloads again. Alright, so we can see that, yes, the market is stopping up. Yes, there's quite a bit of aggressive buying, but equally we are seeing liquidity in the market now. So note that straight away, quite aggressive. We saw the market lift the 80s, reload 300 and offer straight away. Alright, really good auctioning process. Notice now how 8081, we've suddenly traded 3,500 contracts. Right. So since we broke out the 67s up to the 83s, we can see that the market has now found liquidity, and that's important. That's crucial to understand because it's that liquidity that's aiding people who are stopping out to not have to keep buying out of higher prices, but instead just kind of be a little bit more passive and get out at the market. So that's crucial to understand, guys. Had this been different, let's say for instance we didn't see that reload 80, didn't see the reload 81, right? The market would have very likely kept stopping up. Okay, and that's crucial to understand. If there's liquidity, the market won't stop up. Alright, if there isn't the liquidity, that's when the market's going to get a stop up. So we've come up a second time. Now note, if I just pause that, the first time we came down, obviously the market stopped at the 78s. We got the reload, bid. Okay, so keep in the back of your mind those 78s. We're going to watch that as it comes back down in a minute. So again, market goes bid 81, bid 82. Okay, so we can see real offers being lifted. Yeah, 400 lifted. Right, again, we can see this buyer comes to the market and straight away we can see obviously seller reloads the 2s and back onto the 1. So again, just confirming that the liquidity we are seeing is there. Okay, that's important to understand. When a market's done a very aggressive move in one direction or the other and you're looking for, some sort of a potential fade opportunity, you need to see that liquidity. Okay, if you don't see that liquidity, if we had not seen this sort of, 7, 8, 9,000 lots traded at 80, 81, 82, you do not want to be entertaining the shorts, okay? Because why? Well, the market could very easily just stop up again and keep on going. Okay, so if you see that absorption, you see that selling coming into the market, by all means take the risk, but don't just randomly sell a market because you feel it needs to go down. Okay, so notice what happened there. Market bid up 4, market bid up 5, and straight away, notice what happened. Someone sold quite a big chunky clip into the market and it blipped down a 3 tick. So again, we saw the absorption on the way up, we saw the reloading on the way up. The minute the market extended, we got a relatively aggressive sell order in the market. Okay, and it's that sell order that gave the signal to be short. Okay, you can see there, look at that, 668 at market, 82s, and straight away the seller hits the 81, straight away hits the 80s, and you will see he becomes more intentional, more aggressive now as he looks to get his positioning away. Okay, so that's the kind of price action we saw up around these A5s. Bang, straight away, 3 reloads, and what does he do? Again, he hits 3, 2, 180, straight into 79s. So twice we've seen the seller. Now finally, we can see not only was the seller absorbing the offer, but he was also reloading, and he's now turning a little bit more aggressive. So it's almost a 3-stage step there. You've got initially on the way up, okay, the seller is absorbing passively. Then when the market becomes a little more aggressive intentional, the seller then starts to look to be a little bit more aggressive, reloading his offers, and eventually he then turns more aggressively and executes at the market. Okay, so it's a timing issue. You don't necessarily want to be selling whilst the seller is still passive because you're not going to go anywhere as a seller. right? You want to be selling once the seller turns from being passive to more aggressive. And that's all we've seen. We've just seen a shift from being a passive seller on the way up to now being a little bit more aggressive. Okay? Remember what we said obviously the last time? 78 was that key price on the way up. It held as a reload. Okay? So straight away we can see the 78s go, 77s go. Okay, so what we would need to see, in other words, if this was now, it's almost like we're looking for confirmation. We're looking for, the seller finding a ground, finding, a price that it can now hold that can give you the confidence that actually you are in the right position. So the reason I mentioned the 7s and 8s is simply because, we saw a reload there from the buyer the first time. In order for the seller to show his strength, we need to then hold on to that key little price. Okay, so we can see again, market goes 7 offered, and straight away we get a reload from the buyer, and he lifts the 8 at the same time. Now notice what's happening here. We can see the seller selling the 8s, but what's the buyer doing? He's also buying the 8. So the seller has now run into liquidity. Okay, so again, that's why it's crucial just to keep observing the price ladder and what is ultimately occurring. So what I want to do is I just want to fast forward this a little bit to the point that the seller finally captures the lower price and holds on to the break of the 77s. Okay, so again we can see I'm just slowly fast forwarding 7/8 hold, 7/8 hold, 7/8 hold. Okay, so 7s holds again. 161.77 becomes a really key pivot in the market. Why? Because it's now hold as a reload and the buyer keeps on holding the position. Right, let's go a little bit further forward. So we come again down to the 7s and the market holds it. If I fast forward again the market comes down and it holds it. Alright, let's see what happens now finally once the seller breaks the 7. So the 7s have been broken, and straight away we can see the seller hits into the 6s. Okay, straight away the 6s reload. Alright, and the seller then goes into the 5s, and the seller then goes into the 4s, and I'm just going to move this a little bit further forward for you. So we can see now the seller is finally reloading and defending the very price that the buyer was reloading and defending. So now 77s becomes our key little pivot on the price ladder. And you'll see, if you go and watch this back yourself, you'll see eventually, ultimately, the market keeps drifting lower and lower and lower down the page. And ultimately, we then eventually trade down to the 69s. Now, what I do want to point out, however, is that those 77s become a very crucial pivot again to the upside. So what happens once we took out those 77s to the upside again? Let's go and have a look. Okay, so we can see the market comes back. First test of the 77s, it holds. Okay, so the market respects the 77s first times and it holds. All right, again, we can see now support in the price ladder acting as resistance, and the market then offers all the way down to 69. So let's quickly, because I don't have it on the ladder, I just want to bring the chart up for you one last time. Let's look once what happened when we took out the 77s to the upside. Okay, so if I put a little red line on it, we can see once the market then came back to the 77s, it held it initially, offered. It came back, held it initially, offered. Once it took it out and claimed above it, we can see then the Bund obviously extended to the upside, made a new high on the day before we started to see accumulation at higher prices. So crucial, the price ladder shows you nothing more than what you're going to see on just a normal candlestick, except you're seeing it in real time, quick time. Okay, that then is our price ladder analysis. Now, let's just quickly summarize that. It's so crucial, guys. If we look at those 85s, yes, we got a good little auction process off there. Okay, it wasn't a straightforward sale. As you can see, I think that video took place over, almost 25-30 minutes. So you've really had to work for your money, trying to be a short at the top end of that distribution. All right, so that's the crucial thing to understand. But note, it gave you a lot of little bits of information that you could have leaned on to ultimately manage a risk, and that's the key, guys. So long as you can manage a risk, you have got a good trade strategy. Okay, that's what counts, is managing risk. It doesn't matter what you're doing, what tool you're using, what market you're trading. If you can manage the risk, you've got a good opportunity.